It's live with the mortgage calculator. Today we're going to go through some live mortgage rates and then do a deep dive into conventional renovation loans. So, our last topic was VA and USDA renovation loans, and today's going to be conventional renovation loans. We'll get started here in just a moment. Feel free to drop a comment here as you tune in. We did put the chat up on the screen. So go ahead and drop a comment as you tune in, and we're just going to wait a minute here to go live on all the different platforms. We are streaming this live on YouTube, Facebook, and LinkedIn. So give us just a moment to get up and running here and let everybody have a chance to jump on. I see some people commenting already. We appreciate the comments, and we'll get started in just a moment. Hope everyone's been having a great week, a great day so far. And it looks like we are live on all the different platforms, so we can go ahead and get started. But as we go through here, feel free to keep dropping comments there in the chat, and also drop any questions that you have in the chat as we go through the deep dive topic here today. But we'll go ahead and take the chat off the screen for now so we can get started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through some live mortgage rates, and then we do a deep dive into a different topic every day. And today's topic is going to be conventional renovation loans. We already did USDA and VA renovation loans on the last show, and now we are talking about conventional renovation loans today. So our sales manager, Jose Gonzalez, will do a deep dive into conventional renovation loans. But before we do that, we'll do what we do every day, which is pull up our pricing tool and see what the rates are looking like. So Nick, let's go ahead and pull up the pricing and look at what the market is doing this morning.
All right, switch my screen. Check it out. So we're probably not going to see much movement here because the big Fed announcement is not until this afternoon. But this tool will show us the general rates and APR for today. It is September 20th, just after 11 a.m. Eastern. So our general rates are live. I imagine all the rates will change today after the announcement. So we'll be excited to check it out tomorrow. If you'd like a full loan estimate that breaks down all the fees that go into the APR, please get with one of our team members. We have over 400 licensed loan officers in 24 states for primary and second homes, and we can do our business purpose loans in 44 states. So to compare across the programs, we'll set up the same scenario for all our demos today. We'll set a $400,000 loan amount. We'll set the LTV to 80% loan to value, 20% down payment. We'll set the desired price to 99. It means we're going to ask the computer to find the best rate at one discount point in cost. And we'll check out our conforming conventional options, then our FHA options, and then we'll pull up our expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs with alternative income. We also have VA and USDA. VA is only for our eligible vets and active service members. If you are eligible, let us know. It takes us just a couple clicks to quote it. And we can also quote the USDA properties for those shopping in a USDA eligible area. For today, we will start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio of 40%. So with these settings, let's check the rates this morning. And again, same as it was yesterday, we should see some movement maybe later today. 7.375 rate, 0.875 discount points. Puts the final APR at 7.538 here for conventional. Now, if our customer doesn't qualify for conventional, the next option we usually want to quote and show our customer is going to be an FHA program. So we'll set up the same exact scenario. Everything will be exactly the same. But FHA does allow a little more leniency on credit issues as well as a higher debt to income ratio. So this is usually the next option. So everything else will stay the same. So we can compare apples to apples. And again, it's about the same as it was yesterday, 6.5 rate, 0.933 discount points and costs puts our final APR at 7.090. So good option for our customers that qualify for both. Definitely check out FHA. It's actually quite a bit cheaper, about 0.5 cheaper today between conventional and FHA if you qualify for both. And for our customers that have to use FHA for the leniency that it has on some of those things, definitely a welcome change. Now, where we really love to specialize here at the Mortgage Calculator is if our customer doesn't qualify for either program. That's where many other banks or lenders have to deny our customers, and that's where we love to approve them with our expanded guidelines, also known as non-QM, where we can use alternative income. So we'll keep everything else exactly the same. However, we have a new option that pops up for our non-QM, and that's our income. So full doc is 2 years of tax returns. That's what we use for conventional and FHA. So we would typically choose this in order to take advantage of one of the alternates, such as asset related, business bank statement. Our investor programs are just for investment properties. Personal bank statement 12-month is the most popular. That's what we use today. We have RSU, stated, DOE, 1099, P&L, and no income CDFI, all kinds of different options. Most popular is the 12-month personal bank statement, and that's for our self-employed borrowers. Many times when our self-employed borrowers submit 2 years of tax returns, may have various write-offs and may not qualify at all, or just may not quite get enough income to get the home they really want. So we'll solve that problem here by using alternative income. We'll simply use their last 12 bank statements, no tax returns at all, and we'll determine, in this example, a debt-to-income ratio of 40% using just their cash in the bank. So many times our self-employed borrowers will qualify for double or triple the income and can therefore get the home they really want. So let's check out the non-QM solutions today. Best option at the top here, 7.5 rate, 2.5 discount points and costs, a little higher cost there for a final APR of 7.617. So just a touch higher than conventional here for our customers that need to use bank statements. Now you see we have a ton of different options here, some at a little bit higher rates and costs. Some of these may allow things like bankruptcies and foreclosures and other items that would cause us to not otherwise qualify. So tons of different options, hundreds of different options, matter of fact, here using bank statement income and other items we can get around for qualification. So please get with our team and they can find the best one for you. And before we pass it off to Jose, we always want to do some investment property live pricing. So we'll switch up for the last two quotes here to investment property occupancy. And we love to work with our investors, whether they're seasoned investors or first-time investors. We have some great options. So we'll compare our most popular here. We have our conforming conventional options. Obviously not as popular now as conventional rates have gone up for investment properties. And we have our non-QM expanded guidelines, which are ever more popular for investment properties. Remember, government programs, FHA, VA, USDA, do not work for investment properties. So we'll start with conforming conventional. We'll keep everything else exactly the same. The only thing we've edited here is the occupancy, so we can see the adjustments that conventional has made to investment property. And the best option here at the top, 7.625 rate for 2.875 discount points and costs, puts our final APR 7.854. So a good option for our customers that need conventional. It's actually down a little bit from where it was before, but 2.875 discount points, $11,500 in this example, is still quite a bit of money that our investors would typically like to spend elsewhere. So many investors ask for other quotes at a higher rate, but for conventional, that's not really possible to raise the rate and lower the discount points. That's where we love to present our non-QM options, which have other flexibility as well. So for the final demo, we'll do investment property, ADLTV, and this time we'll choose expanded guidelines, aka non-QM. And the first thing we must select is our income. Most popular income for an investment property is DSCR because it doesn't require any income. It doesn't require any income or employment from our borrower. We simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the ratio is 1.0 or higher, that means the estimated rental income from the property can cover the mortgage expenses and payments, the PITIA, aka the property cash flows monthly. We also have options for ratios under 1.0 where the property does not quite cash flow monthly. We always put 1.5 for the demo because that will allow us to see all of the programs pop up. And prepayment penalty is standard. We always choose 3 years for the demo since that's the most common. You can choose 0 if you want. That will limit the amount of loan programs that pop up and cost more. We can also choose 5 years if we want, which will again limit the amount of loan programs, but save our customers some money if that's possible. Since 3 years is most common, that's what we always use for the demo. So let's check out the DSCR rates. All right, best option at the top, 7.99 rate for 0.85 discount points and costs, so much less discount points for our investors there. Puts our final APR at 8.052. So the APR is almost identical to conventional. We were actually beating it a couple days last week. And our most important for our investor customer, the discount points are less. We went from about $12,000 in cost to $3,400. So many of our investors, when they're presented with a DSCR or non-QM option side by side with conventional, especially right now, I'd say 90+% are choosing a non-QM option. So please get with our team. This is our specialty. They will find the best program for you. And you see we have dozens of different options here. Some of these at higher rates and costs may allow bankruptcies, foreclosures, other items that would otherwise not qualify us. And some may allow short-term rental income, very popular requests these days. Now, let me switch my screen and we'll get into Jose's deep dive on conventional renovation loans. So we went over a couple renovation options yesterday. So today we'll go over the conventional options, which are going to be Fannie Mae and Freddie Mac based programs. So we have a few different options there. We even have some jumbo options, but we'll talk about that later. I hope Jose will have to add a show for that. But these are going to be our standard conventional options. So let me make you big here, Jose. And if you're ready, let's go ahead and pull up some of these quotes. You unmuted there, buddy? There you go.
All right. How's everybody doing this morning? Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Renovation loans are really popular right now, as we were discussing yesterday. The main reason that they're so popular is because they give borrowers options to deal with inventory shortages, right? So yesterday, now do not confuse, I guess, let me add this, do not confuse renovation loans with one-time close loans, right? Because one-time close is a construction loan for the property, basically which allows you to purchase the land and also allows you to finance your project. The renovation loan is for a home already built to complete renovation. The renovation loans usually will not allow you to raise the property to the ground and build a new home, right? So it's basically for renovation.
Has to be a foundation, at least.
Yes, sir. Yes,
it could be burned to the ground, just like FHA, right? But there has to be a foundation there.
Yes, sir. That is the key. Now, the other advantage to the renovation is on the conventional side is that it does allow for investment properties. So that's a very good option there.
Were you able to get some pricing? Because that's usually the limitation.
Sir.
All right, cool.
Yes, sir. I mean, it is a little limited, so you do got to play with the LTV. You're not going to get the same LTV, obviously, as with the primary, but it is a very great, it's an amazing option, right? Because normally, as you know, all the other, the VA, USDA, FHA, those are all primary. And it's most of the options out there for investment are basically fixed flip type short-term bridge loans, right? That then they have to refinance that at the end of their project. If they plan to keep their property, they have to refinance that into the end loan. So they're going to incur additional expenses. So if you do have a full doc borrower that's looking to do the investment property, that's looking to hold it, because that is the big difference as well. The fixed flip is for exactly what it states. It's a short-term bridge loan where you're not going to be subject to an early payoff when you go pay it off because you either sold the property or you kept it. With the conventional, there will be an early payoff penalty, usually if the loan is paid off less than 12 months from the time that it was funded, from the note date. So please note that the conventional renovation loan for investment is not for a borrower looking for a spec home that they're going to build it, put it on the market, and sell it. This is for the investor that's looking to fix it, should I say, fix it and keep it, not fix it and sell it. So keep that in mind, because it's very tempting, because the rates are low, much lower than the other options, but in lower cost, lower and everything. It's a great option, but it's for the borrower looking to keep the property as a rental. And actually, that's what most borrowers are looking to do right now, because rents are increasing. I would say they're probably increasing. The pace of the rental increase is outpacing the price increases. Many markets in the last 2 to 3 years have probably seen their rents almost double. So obviously that's why the investors are so aggressive right now in their purchases, including on the DSCR realm. That's why we're getting our investors cashing out their properties that they've had in their portfolio, and they're stable. I don't want to confuse people with portfolio. Let's say in their stable of properties, so they can cash them out and buy 2, 3, 4 more properties with each property that they cash out. So that's why we love at the Mortgage Calculator working with investors, because we have amazing investment products. So let me share our options with you today. Our first one, best case scenario, highest LTV for this product is 5% down, primary renovation, 1-unit purchase. So here you're looking at pretty good rates. 7.75 is costing you approximately 1 point. This is $475,000 loan amount there on a $500,000 purchase. 7.125 is your lowest cost option at just under 3 discount points. So now we have a primary renovation 1-unit cash out. So contrary to the USDA and VA products, which do not allow a renovation loan to have a cash out component, the conventional option does allow a cash out component. So here you're looking at 8.125 that would cost you roughly 1.75 points, and you can buy that down all the way to 7.625. This is your 80% LTV cash out option. So now we have a conventional 90% rate and term refinance. Now this is a Freddie Mac option. Please note that Freddie Mac and Fannie Mae do have subtle difference, well, actually not so subtle differences in their renovation program. Whereas Freddie Mac seems to be much more friendly to allowing renovations on manufactured homes, which is, we just had the manufactured home training last night. Very popular segment right now because of the good rate of return, good cash flow on those properties for investors. So Freddie Mac does allow renovation on their product on manufactured homes. So here in this option, we're looking at 8% as your lowest cost option, 7.375 your lowest rate option. So this is a 90%. Now on the rate and term, you can take it all the way to 95%, just like you could on the purchase. So very good option for those people that looking to max out their project, right? Home has a little bit of equity. So, again, in the renovation loans, also keep in mind, you're obviously going to be limited by LTV, but that's going to be determined by the ARV, which is the after repaired value of your property. You're going to have your as is value, which is the present value of the property. you're going to have your renovation budget, and then you're going to have your after repaired value. So you really have to do some good research, reach out to your real estate consultant, have them prepare a nice little market analysis for you of what your property's worth, to give you an idea where your target will be as far as the limit on your project. What would be your 95% LTV amount? Because it's, excuse me, because it's going to be based on the after repaired value. So here at a 95% LTV, we're looking at the same rates. Let me just click over to that other one. Yep, it was a little bit more of an add-on here, just slightly, like $500-$600 to the cost of the rate to take it to 95% LTV. So 7.75 is your lowest cost option, 7.25% your lowest rate option. And then, like I mentioned to you all, here is our Freddie Mac investment rental. Now, obviously, Nick, I think I was able to get compliant rates because I set it up as a rate and term, not as a cash out. And I'm at the limit pretty much. I only had two options. I think it was 2.75 for 7.75%, 2.75 loan discount, and 2.875 for 7.625.
So technically, the LTV is 80 something on that, isn't it?
What do you mean?
On this product, I'm saying.
Well,
technically,
no,
but we just can't reach it. You can
yeah.
do a
Yeah.
You can do a purchase. The LTVs, that are printed, guys, they're out there. They're higher, but unfortunately, the pricing with conventional being crazy right now, we just can't attain it. So maybe in the future, but that's why Jose is presenting what's attainable, not what's technically possible, because it's not.
Absolutely. I mean, I guess the one way to be able to get around this, not on a refi, let's say, but if it was a purchase where you maybe were dealing with a borrower with a slightly lower credit score for whatever reason, you were trying to hit the compliance mark and pass, try to get some seller credits, and the seller paying the loan discount, it does not get counted against the borrower as a borrower paid fee. So that would be one way to be able to pass your compliance test, is by getting seller credit to try to cover part, or if you're lucky, all of the loan discount in certain situations. However, that's not possible in this case as a refi. But if this was a purchase, where now we would be facing possible issues, because at 80% on this option here, I was at 5.875 points at 80%, which normally that's not a doable deal unless I ask the seller for a 3% seller contribution.
But it's an investment property, and there's limited contributions as well. So you're kind of stuck between a rock and a hard place there currently. But this option is 100% doable. So that's what we're talking about right now, right?
Correct. Yes, you're absolutely correct there. In the limits, I believe probably on an investment deal, I think they may limit it to 2% total, something like that. So you may have to go 75% if you were trying to do the purchase. But again, doable. The investors will jump on it all day long.
All right. I don't see any questions out there. If you do need more info on these, you can visit themortgagecalculator.com. Remember, we do this show every single weekday, 11 a.m. Eastern, where we go through the live rates and then do a deep dive into a different topic. So we'll be back tomorrow with a new topic. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody. Have a great day.